Every single day, I want you checking the VIX futures at VIXCentral.com. This is what's called the VIX futures term structure. Now, every one of these points is a VIX future, and they represent the market's estimation of forward volatility for each month going out in time. So March, April, May, all the way out to October. In a stable market, when everything is calm and the S&P 500 is just trending higher, those VIX futures will align themselves in what we call contango. That's when the longer dated VIX futures are priced higher than the shorter dated VIX futures. A good example of this would be from just a couple of months ago. This is January 8th, 2025. Notice how each VIX future further out in time is higher than the previous one. Again, this is called contango. And this makes sense for stable markets, right? The VIX futures are a freely traded market, so in stable markets, of course, all the traders out there are going to need to be compensated for taking on that future unknown risk. There's an expected premium priced into the market because more bad things can happen 3 to 4 months from now than compared to, say, 1 month. This is why in a stable market, they get priced higher as you go out in time. Now, back to our VIX futures term structure right now today, during this latest market correction, we can see it's the opposite shape. This is called backwardation. Backwardation is when shorter dated VIX futures are priced higher than the longer dated ones. This should also make sense when you think about it from the perspective of a trader. If things are ugly today, of course those shorter dated contracts are going to be priced high. High market volatility means higher priced VIX futures. But it's pretty likely that whatever is causing the market to drop recently, within 3 or 4 months, that should probably be resolved. It's rational to assume that in a few months the VIX will come back down. Now, what if I were to tell you that the VIX futures are in contango on about 84% of trading days? This means VIX futures are only in backwardation and showing elevated risk on about 16% of trading days. That's a pretty easy way to filter out the riskiest days.